Let's start in South Africa. The country's finance minister, Pravin, plans to increase wealth taxes this year as part of a wider set of efforts to bring down a pretty stubborn budget deficit. In his first budget ever since he was reinstalled to the job in December, Mr. Gordhan said low-income earners would be spared from direct tax hikes, at least on the income tax side, but he pledged to cut spending as well. Now, he vowed to narrow the fiscal deficit to 2.4% of GDP in 3 years' time from the current figure of about 3.9%. That, however, was nowhere near enough to appease investors in the markets. They're looking for more determined measures to boost revenue, and that includes tax hikes, more vigorous ones, and the sale of inefficient state-owned companies. The rand fell by 2.4% against the American dollar upon Mr. Gordhan's remarks. South Africa is at the brink of losing its investment-grade credit rating status because of slowing growth and rising debt. S&P has a negative outlook on the nation's sovereign credit rating of BBB-. That's just one level above junk. Angela Kupler is live in Johannesburg right now. He's got the latest, of course, on the budget speech. Angela, what sort of reactions are you getting to this event today, to the spending plan laid out by Mr. Gordhan?
Well, the various people we've spoken to are all saying more or less the same thing. There's no compelling growth strategy in the budget speech. Currency reaction is weakened. You said 2.4. At one point, it was actually at 3.3%. So that was a huge drop in currency. But economists are saying there's probably a lot to do with what happened in Brazil and the fact that they were downgraded there. So that happened during the speech in about the same time. It's also linked to this revised GDP growth downgrade of 0.9% that the finance minister was speaking about. In terms of what the economists are saying, they're saying it undershoots everything and it probably could lead to some stagnation. The speech didn't go nearly far enough to halt and reverse South Africa's economic decline. In terms of business, most business people we spoke to are saying that there weren't any big shocks there and people expected increases in VAT and maybe marginal tax and corporate tax adjustments that might come at a later stage. So on an individual basis, there's not too much bad news, but there are these little taxes that are going to be eating away at disposable income. There's a new tax on tires. Plastic bag tax has gone up slightly. And then, of course, there's an increase on the fuel levy. Raman?
Indeed. Let's revisit a question we covered barely 24 hours ago. Now that we know what the spending plan is over the next year, so is a downgrade to junk status still a done deal?
Well, speaking after his speech, the finance minister says he's done enough to stave off that downgrade. But he also has to balance that with what's good for South Africa at the same time. So he made that comparison. Government says that around $4 billion worth of FDI flowed into South Africa, and that shows whether there's investor confidence and interest here. An economist I spoke to late this afternoon suggested that that number has actually dwindled to nearly zero. And he says it's more than just about fiscal prudence, which is something that the finance minister was talking about today. The ratings agencies need to be convinced that there is a compelling case for growth, which they're not hearing. The four economists that we spoke to saying they're not seeing this. Another suggested that the minister's expectation of GDP growth at the end of the 3-year budget period is a positive sign. But again, no bold growth plans were announced, which isn't good news. The Chamber of Mines came out late this afternoon suggesting that the speech represents a positive contribution in stabilizing the economy. Whether that pans out or not, we'll just have to kind of wait and see, Raman.
Indeed, stabilizing the patient as opposed to actually bringing them out of a coma. Let's talk about state-owned enterprises, the Achilles heel of South Africa's economy at the moment. A lot of them are in bad shape. They do need capital. What's Mr. Gordhan's plan to actually get these SOEs back up and running and making them profitable?
Well, Raman, you'll recall that there was a report released last week, Friday, that looks at the state-owned entity sector. Everything is being evaluated and reviewed, and according to Minister Gordhan, there are no sacred cows, it appears. He's also said that he can't financially support every single SOE, and he's confirmed that the state is responsible for some $31 billion in guarantees, and that's around 11.5% of the GDP. And he asked the MPs this afternoon where the state would get that money if those guarantees were called. So that's just a small source of pressure, and that's probably what the sovereign ratings are busy watching as well, to see how he deals with that big amount of money. And of course, this was his only mention of the ratings agencies in his official papers. Rahman?
Indeed, we'll leave it there for the time being. Thank you for the update. That's Angela Coppola live in Johannesburg, South Africa. We'll have a more in-depth analysis of that budget in the next 24 hours.